Welcome to Caching Waves. This is an Elliott Wave update for DOGWIFHAT. Now, if you've been following along, yesterday I ended up taking a long on the breakout, suggesting that the fourth wave was complete. It looks like that was the fact, and we'll talk about what's happening in the last move up to the upside. But since the low, we had a wave 1 and 2 in blue, targeting this third wave for the longest time up around 496 if we go by larger time frame fibs for our third wave. That is the guideline. And I also took our wave 1, extended it off this wave 4 considered complete, and that 1-to-1's at 492.13. So we'll talk about the smaller time frames and what I'm suggesting here, because clearly this is an extension in the fifth wave off the wave 1 and 2 to reach those targets. We are now going above our pitchfork, which is on modified, which is a good sign. And this is what can happen in price discovery. I want you guys to remember DOGWIFHAT in future coins when we have price discovery, because you can see how they play out. They're not perfect. Sometimes they go against guidelines. Sometimes we get very shy retracements, very tough wave counts, but it's important to consider the eventual targets rather than getting obsessed over getting the perfect correction. Now, as for time, this is just a guideline. I took wave 1 in time, projected it off wave 4, and it looks like we should target, if we hit the 1-to-1 in time, around Tuesday the 19th. So we'll see what we end up getting here. Now I'm going to go over to the 15-minute. I am on MEXC for that. And again, we're getting difficult counts, which is fine. Let's go down to the 1 hour. So if you remember last video, since this high, we have been waiting for this zone to buy, the 618 and the 1-to-1 in time of that 5-wave move to the upside. This was where it was right here. I wanted a little more of a push. I didn't get my limit orders in. I had limit orders there at the 618 at 165 and the 1-to-1 at 285.45. Our stop was going to be at this low at $1. And obviously we didn't get that. We got a series of complex waves in threes. And this was just an ABC. And that's all we got. Just look how shy that retracement is. The only way we were considered complete was on linear scale, and that requirement was met at a 190.77. So last video, once I considered, okay, I showed you guys that's considered complete. I suggested pay attention to this X or B zone, and if we pass the 1.618 at 291, and that is the extension of this first W wave down, that our trend is continuing if we pass that level. I ended up buying just on the breakout because I saw we were going against guidelines. Guidelines are we pivot here to reach those targets, and we were just continuing on. So I ended up buying the breakout. Stop was at this wave 2 low, very tight entry, allowed me to get a decent position size, and now we are trending to the upside. Now the best way I have this count fitting, and I'm trying to decipher how we're going to get up to this 490 area, because we're not hitting ideal targets. Again, we don't get perfection in Elliott Wave. We find the best scenario, the best fib level hits, the best way to count the waves. Have this as a diagonal wave 1. We extended potentially a third complete. Potentially we need one more move up. Maybe we come to the 1.786 at 368.5. Not sure. If we come up to that, then I'd expect a fourth and then a fifth to the upside. But we're not hitting ideal fibs. You can see we came up shy of the 1.618 for our third on log scale. That's why I consider maybe we need one more push. The alternatives is usually one wave's extended. So if that is all of our third, maybe we get an extended fifth wave. In that case, we would pull from our wave 1 through 3 whenever the fourth bottoms. I'm not sure if it's in yet. we would first target the 618. That's at 443. Then the 1-to-1, that's at 569. If we get really extended, the 1.618 at 855. Unsure. I have to watch the price action in real time to know when to exit. But one other thing we have to pay attention to, remember we are in a fifth wave of a third. So what can we get in fifth waves? Right? We can get diagonals. So what can happen here is if Bitcoin drops and pulls this down, remember this can be counted as five waves as well, or 3. This could be an ABC. This gets dragged out. ABC, we actually drop lower than expected. We can even invalidate this count, and then we get our waves up because we can make a diagonal here because we're in the fifth wave of a third. So you got to be aware where you are on the potential map of an impulse, right? Come up, come down, go up, and finally hit our 490 in some sort of a diagonal. So paying attention to that as well. So I would suggest it's best just to leave the stop at this wave too low. Luckily, I got the breakout up here, so my stop's pretty tight, but it's a tough entry either way. Your best bet would be to pull the whole range and expect to defend that 618. So I don't expect this pitchfork to hold. Maybe we switch to modified, but we'll have to see what we get here. Again, we came up shy, so it's not the best fib extensions we hit, and this could turn into a diagonal. So that's where I'm going to put my stops, considering that we could get a diagonal. Because this could be relabeled, right, as an ABC, and this could be labeled as an A, B, C, D. Could even have a triangle in there, a running flat. A, B, C. This is 1, 2, 3, 4, 5, right? We could get that. In which case this would probably slowly break down. We got a flat here, make 3, make 3, make 3, make 3. Comes down to our zone of the diagonal, and we just make a diagonal from there. So just things to consider. We could get an impulse here too. We could get that extended fifth, but just realize on the map we are on a fifth wave, right? So there's a lot more chop potential here on the fifth wave. So if you are playing this as an impulse, I did pull the fibs. Obviously you would expect to defend the 50 on a fourth wave, potentially fourth wave in or one more down, 382 in the 50. That setup would look like if you get the move to the downside, somewhere in the middle, stop at the 50. If you're DCAing in, targeting that 490. Which is still a pretty nice trade setup. But you just have to weigh your pros and cons and realize it could turn into diagonal. And we get much lower pricing from here. Pull the 618 from the diagonal standpoint. And that's much lower. So it depends what you think is going to happen here. And if you get the average of that one, if you kind of combine the two, it's a much worse risk reward up to around 490. Not even 3 to 1. So I take both personally. If I wasn't already in this, I would take both, but I'm just letting this one ride out. And if I do get a lower pivot, I might consider adding to my position. But we'll see. Do we need one more up for our third, and that's actually our third wave, and everything has to be moved over? Or do we get an extended fifth wave up to further targets? What I don't like is none of these line up with that 490. That's why I'd consider maybe we come up to the 1.786 to actually complete our third wave. And then if we got a decent correction, we could kind of reverse engineer that. It would look something like that. And that would actually get us at the 0.618 extension of 1 through 3. Come up to our third, come back to our previous fourth. Let me even put those trend lines on so you can see where they are. Come back, consolidate our fourth, then get our fifth. But you can see we're at a very difficult moment. Just kind of paying attention to what happens here. There is a trade setup if you want to play it as an impulse, but that would just be past the 50, and you have to realize that we can also be making a diagonal based on where we are on the map. Fifth wave of a third, right? So that's it for this one, guys. Thanks for watching. I'll make sure to update this as we go. I'll see you on the next one.